The NAS 100 performed pretty well this week. The only exception I would say is on the 26th. There was a bit of chop, and entries for the opportunity were given outside of the time horizons. So we had one over in London that was confirmed an hour too early, and then the second trade was confirmed out like 15 minutes too late, right? So that's really frustrating, especially when it's a trade of this magnitude. I mean, this thing fell over 400 points, and on New York Open, there was nothing to work with, not even on the TOS, right? But that's neither here or there. The trades today have been pretty good since then, right? From then to today, everything's been pretty solid. There's been some fake outs, but they've all been manageable because I flipped the account for the first time, and that's the first time I can say that in a long time. Yeah, so for example, here we had a pop to the upside where it did do 150 points, where you could have done 200% returns on your investment. But just because I'm doing like a trailing stop method, I may have failed. I might have held for too long, right? If I had taken the trade. But I did take the one to the south side, and that one did 200% before I locked it in. But you can see it's still in free fall right now. And that's what's happening there. If you go over to the Aussie dollar, I also did 100% today. And this one was a really exceptional trade. You could have got in on full margin, and this thing has done, I don't even know how much. It's gone to 82 all the way from, Jesus, all the way up from 60, right? So that's like what, 500% returns on your margin on a single trade. That's if you hold it, right? In most likelihood, I probably would have closed it out a bit earlier than that, as I did here at this SMA. And the only reason I did that is because I thought that there was going to be some discretion between this trade and the NAS 100, because they're a bit correlative, and at the time it seemed like the NAS was holding a lot of support to higher highs. So I said, all right, let me get out. This is probably not the right trade. But I think retrospectively, it's important to be able to hold your trade based on the analysis that's given for that particular security, right? And we did get some pretty close pullback where I said like, oh crap, this isn't it. But I held it, and it was only due to the roundings of these two variables that held me to sustain the trade. So that was a really good call on my point. The only fuck up otherwise is that there was two other trades that I could have taken today, and I didn't take them. Right, we had a key here, 012, 01030. Yeah, so I mean, it's a give or take. This was a decent trade. It went down about 14 points or whatever, and then we had the second one here. Now I'm thinking of including Ethereum just because I've seen a lot of opportunity throughout the days that I've been looking at. It's just nothing but really good trends that give adequate entry opportunities with a tight spread. I tried looking at every other pair. There's nothing better than this. The Polkadot is terrible. Bitcoin is higher on the spread, and nothing else is really sufficient. So I will do that for the weekends just because I need to trade. I need more target practice, and hopefully I should make some money, right? We just missed out on this really great trade to the down. We had keys here. We had a break somewhere in this vicinity, and I think just impulsed in my favor, right? Entry would have been here or something. This is Bitcoin. My bad. And Ethereum. Yeah, it was around here. Lastly, if I go over to the TOS, I've been doing a lot of cross-examination with what some of the prominent guys are doing in the industry, and it seems like Trader Society and Ricky Gutierrez and even Lambo Arul are all in correlation to my psychology of how I'm like actually reading the charts, where the entry points are, and the risk management that's associated with it, right? Like, I've reviewed Tesla, okay? I reviewed Walmart. I reviewed the SPY several times. I reviewed a few other like mid-cap stocks. I reviewed gold because Lambo had his best trading week or best trading day, sorry, at $202,000 on gold. And I was able to execute the exact same analysis based on the H1 price action, right? So that was really cool. But yeah, especially with these equities, man, it's so easy to trade this shit, dude. Like, just look at that. Look at that, bam! You got in like here. You just rock prices higher. Maybe you'd want to get in a bit earlier, like probably at that break and with the entry directly at 925 or something like that. Either way, it's still profits as long as you just play it conservatively, and then you would have done the same thing to the down, which was even more profitable. And yeah, it's just been like that week after week after week after week, dude. You could hear my voice. I'm getting tired of this. I'm getting tired of being poor, getting tired of being apprehensive about nothing. The shit works, and it works really well. I was afraid of Q2, and now Q2 is here. We're at the end of the first month, and it's performing better than it was in Q1. So I'm looking to scale, and I want to bring an end to this melancholy that I have lingering over my head. I know you could hear it like a cancerous cell, but yeah, it's over. I'm pretty sure it's over. I'm pretty sure I've conquered it. And as a last remark, I would say the things that have really solidified this has been looking at trading the specific time horizons, doing positive risk to reward, and order blocks. Those are the three biggest game changers for me, man. Big deal. Big stuff. Big stuff.